So one of the easiest way you can catch many pips in the market is by identifying simple trading strategy or trading setups, and one of which is the simple chart patterns. Now guys, look at these moves that are able to catch here just from simple chart patterns breakout, right? So in this video I'm going to break out these chart patterns. I'll share with you how exactly to identify and draw them out and be able to catch very good moves like this just within a short period of time without any stress. So basically we'll be talking about continuation chart patterns, and you are going to see how to identify these chart patterns and then how to catch hundreds of pips just trading chart patterns without complicating your trading. So make sure that you watch the video to the end so that you don't miss any demonstration. Okay traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX 75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss. Talking about what? Continuation chart patterns. What are they? A continuation pattern is a recognizable chart pattern denoting temporary consolidation during a period before carrying on in the original trend's direction. So it's what? A temporal consolidation, all right, within a particular period of time before carrying on to the continuation of the trend. All right, so if you look at price here, you will see that basically we had a downtrending market based on this time. All right, and you see that what there is a temporal consolidation after what a strong down move. We will have what we have a temporal consolidation before it carries on. That is what we call a continuation chart pattern, right? So we are going to do a demonstration. All right. Okay, so basically now we see this is where we are going to be demonstrating this continuation chart pattern. Now basically you always find most situations where continuation chart patterns, once you see price move, right, you see a down move like this. When there's a trend, price moves, most often you see price will consolidate, and this consolidation is what we have actually been talking about. And this consolidation will help many people enter this trade are now taking their profits, and price is now consolidating so that other people can join. And once people join, sometimes you see a breakout, price will still move, and all of a sudden you see consolidation. And I tell you, this consolidation sometimes will give different types of chart patterns, right? And as you train your eyes to identify them, you are going to with time know how to identify these chart patterns. Sometimes you will find what flag patterns, all of that. Now let me go to our Telegram channel. These are some chart patterns that are actually dropped yesterday. All right, we're revising and then we took some trades based on these chart patterns, right? Let me just show you guys. Right, this was one example. This was the signal I was given earlier on, right? This was the signal I was given earlier on, and then later on, look at after the breakout, look at how price moved, right? We had some chart patterns that we were given, and these are some of them. Now these are continuation like this is example of a flag pattern. All right, this is how it moved. This was VIX 75. We had price moving within this chart pattern, and we're actually waiting for a breakout. And you see that once price breaks out of this chart pattern, it's actually going to move just the way you have seen. By the way, if you are not yet in our Telegram channel yet, just make sure that you go to the pinned comment below. You're going to see a link. I'm going to drop a link in the comment section so that you can join also, so that you get in educational content like this that can help you. So basically, after we have breakout, price will actually tend to always move out. And like I said earlier, now once this consolidation happens, there's always what there is always a chart pattern that is forming. It could be a flag pattern, it could be a rectangle, it could be a triangle. So it's all based on how you connect them. So you simply use what your trend line. All right, in this situation you simply use your trend line and then you try to connect. Once you connect the peaks and the troughs, it's actually going to give out a pattern, right? Sometimes like this, for instance, this is what we call a broadening wedge, right? Sometimes once you connect, it's going to give you a clue of what type of chart pattern it is, right? Sometimes it consolidates and it consolidates inward, and you always wait for the breakout. if you look at this very well, you're going to see that all of them, they have different shapes. They have different shapes, and that brings us to what we call different types of chart patterns. Right now, if you look at the image, for instance, the image that I dropped, you're going to see we have different types of chart patterns. All right, let's go back to the mentorship group. All right, this is the image that I dropped yesterday. Now you see different types of chart patterns. They're mostly continuations. We have what ascending triangle, and it is based on how price consolidate. We have a descending triangle. We have a symmetrical triangle that consolidate inwards. We have rectangles, pennants, and all of that, right? So we have many types of chart patterns, but basically we cannot examine all of them. But I'm going to be sharing with you these live examples on some of the most popular chart patterns that that usually happen in the market most often, right? So now we are going to use the replay tool, and then I'll show you how to plot them, right? Okay, now if you look at it very well, now you see that once price drops, okay, it drops like you saw this drop, price will now consolidate backwards, and sometimes you tend to form what a pattern, because from there now you are simply going to connect like this. All right, you wait for price to break out of it, because when you connect below, you connect above, it's actually going to communicate an information to you that this is what a chart pattern. It could be an ascending wedge. What you simply do is you are waiting for price to break out of here. Once you see the candlestick that close here, that is where you are taking your sell order. All right, if you are going for bearish, for aggressive entries, so you'll be entering here, and then you'll be targeting the previous lows, like which are these previous lows here. You're waiting for price to come and then hit around those previous lows. All right, consider that to be your target, and sometimes price will break out, come back, and then retest the pattern before it continues forming another pattern. And you see that once price drops, all right, price will always come to catch its breath. This is what we call the temporal consolidation before the continuation, right? Now you see from here we had another consolidation, right? We have another consolidation. What you simply do is you just pick your trend line, right? You connect the tops, okay, you connect the tops, and then here you connect the bottoms, right? So once you connect, you have already seen that what we have a pattern there. All right, we have a pattern, and what we do, we simply wait for price to break out of it. Now price has already broken out of it, right? Look at that, look at how it dropped. All right, so basically here, that's where we should have been entering here, right? When price broke out, we should have been entering here, and then we are targeting what the previous low, like I just said. This is the previous low here. That's where you should be targeting. So you're entering here, your stop loss above there, and then you're targeting the first previous low, right? So now you see that the trend continues. You see now that the trend of the market is downward, and you see that each time, like we defined initially, we said after a downtrend, there's what a temporal consolidation, all right, which did not or wait for it to break out, and we are waiting for this breakout of this consolidation because it gives us a pattern. Now we are looking for what a breakout. Okay, now we have another consolidation here, right? What we simply do is we connect. Okay, so what we do now is we make sure that we connect to get many touches. Remember, we still use the trend line knowledge that we already have, right? We just connect so that we get the touches, and then we are waiting for price to break out of it, right? So let's see how it plays out. Okay, look at it. Price drop there and it breaks. Let's see how it goes. Look at how it drops powerfully, right? It drops powerfully after doing this. Now, if you look at it, let's just cancel this. You're going to see that we have this to be a symmetrical triangle, right? This is what we call a symmetrical triangle. Price consolidates inwards. After drop, it consolidates inwards, and as it moves further, this trend line slants inwards, and as it gets tinier, that's how it prepares for a breakout, and all of a sudden price breaks out, right? And that's how it drops, and all of a sudden price still drop again powerfully, right? When price drops now, it start consolidating, right? Okay, it comes back around the zone where there was a breakout, and maybe it's looking for consolidation or looking for breakout. Now look at another pattern here. We have what we call a head and shoulders pattern. We have a head and we have two shoulders. This is a head here, and we have two shoulders. All right, now what you do is you connect the neckline, right? You connect the neckline, and then you are waiting for price to break through. Okay, okay, So you can connect the neckline like that. Then you're expecting that price should break through on the next line, and then all right, now that's it, price broke through. Now you can enter here and then you place your stop loss a little bit above there. Now one of the ways to determine your profit target is by measuring the size of the pattern. For instance, this is the size of the pattern here, right? Now you pick it. Once it breaks out of there, what you do is you simply, oh, I'm trying to drag this. Okay, you simply take and then you place. Then this should be a target because it's the size of the pattern. Up here it could be the same, right? So the size of the pattern, then you place, that's where your target should be. Your target should be, and you see that the target falls at this previous low. All right, and then here you can do same. You measure the size of the pattern, and then you want to be targeting, you want to be placing it as your target, right? So you just place here the size of the pattern, and then you remember I've already entered the trade, your stop loss above this candlestick that led to the breakout, and then your target to be like that. Let's see how it plays. All right, you see it drops and then target hits, right? And then all of a sudden you see price move down powerfully, and once price move down, we always consolidate. This consolidation is just such that people who enter this trade here, most of them have taken their profits, and that's why market is consolidating. And normally price will only move when there is what? Price will only move when there are what? Heavy orders that are in place. Now we see price consolidate again. All right, so here you can look at, there is kind of uniformity here, and then price actually moving up, right? So after I consolidate, we look at this consolidation here. Let's see. Now this is still a pattern that price is actually forming, right? Okay, now we see a breakout of the pattern. Now we enter and then we are targeting these lows here, and then all right, see how price move. Okay, look at that, guys. Right, it move. Okay, probably it went. Okay, our stop loss got hit, right? Stop loss got hit here because price actually moved a little bit back, and then there was a strong up move. So that is it, our stop loss got hit, and that is how trading is. Okay, and all of a sudden price dropped. Now you can see, you can see identify this to be lows here, identify this to be lows, and you're waiting for breakout. But however, we are looking for chart patterns, right? All right, so that is where price is currently at right now. We have price currently at this zone. Okay, so sometimes you can still adjust it, you can still modify it to get some other setups. Okay, if you look at it now, look at how price moved here. Okay, we lose the other trade, and then now you see price has moved like this. When price keeps moving, it creates new patterns and all of that. So this could still look like what? This is the initial breakout here, right? This is the initial breakout. This is where we currently have price. Okay, now if you are connected like this even makes much sense, right? So you see, this is what we call a flag pattern. When price moves down, it moves like a flag that is slanting backwards, and all of a sudden price comes and break out. So from this breakout now, you see people who sold here, other people waiting for price to come back and retest sold, and then we're looking to be targeting these zones and then targeting this zone. So currently this is where price is. I think this is where price is currently at now. So you see how simple it is to identify simple chart patterns, right? Look at simple chart patterns from here. You got 1, 2, 3, 4 setups, four setups and lose one, and now we have a possibility to still short again, right? And I'm looking for, so this brings us this the initial example that you saw in the chart when we just started the video. This are the initial example. Now look at the analysis that I already done in advance. Look at this here. So we have this still holding. Look at it, guys. This example of what I was saying. So I hope I've explained to you how I was able to identify this, how I was able to do what I did here. All right, so basically that is how you can identify chart pattern. Now remember, this thing works for all markets, right? You can trade it in any market, wherever you are trading, indices, whatever you are trading, because it's price action and most often it works. All right, but it will not always be 100%, like I said. All right, so look at this, guys. This trade is already moving, so this could still be another. Okay, this could be another trade here, right? Targeting these lows, right? So basically that's how to identify and trade chart pattern. Right, so I've explained to you the initial or the reasons why price always stop and consolidate, because people are taking their profits, and when consolidate it form patterns. I've showed you how to draw, connect your wicks. All right, you basically use the knowledge of trend lines, and I've made videos and I've explained on that. So if you have never watched the videos, you can still go and watch, so that with the knowledge of trend line you can use to sketch out these patterns and see get good trading setups. All right, so thank you so much for watching. If you have liked what you see or you like the video, please give me a thumbs up. Just hit on the thumbs up button, it helps. Drop a comment below. It also encourages us to know if what we are bringing on YouTube is helpful. And also make sure that you share with fellow traders and subscribe to the channel if this is their first time, by hitting on the subscribe button and notification bell, so that anytime I post a new video, you'll be the first to get a notification. Thank you for watching, and see you in the next video.